Tax tips you need to know today on Major Money Matters. Greetings from beautiful Naples, Florida. We're on location here, and I was going to wait till I got back home to the studio to do this video, but I realized it's getting to the end of January, and many people are already starting to reach out to me and ask me whether certain things are tax deductible. So what I want to do is lay out really 6 things that you should be considering. Now, before I say anything, I always tell you, don't take tax advice from a mortgage professional. You will go to jail. So make sure that you are actually reaching out to your CPA, okay, or your tax professional to get concrete guidance on your particular situation and how this affects you. But here are some things you need to keep in mind as we're in tax season, and you need to be looking at your maximum amount of deductions to save you on income tax. First thing about taxes, okay, you need a professional. Now, in our legal system, it is actually true that if you're on trial, you can defend yourself. But it's often said a person who defends themselves has a fool for a lawyer and a client. It's the same way in taxes. So you need a professional. I don't really care if it's H&R Block or CPA or something like that. There are simply so many things about the tax laws that you can't figure out on your own because you have a normal job. So if you're not a tax professional, you really should be reaching out to a tax professional to do your taxes and help you with your taxes. Look, yes, it's going to cost you a few $100s to do that, but that few $100s can actually save you a lot of money and get you more money back in a tax return or something like that. So you absolutely need a professional to do your taxes. All right, second tax deduction you probably need to know about is MI or mortgage insurance, okay? Now, if you did a FHA, USDA, or even a VA, now, most people don't know this, but for the purposes of a VA loan, your funding fee is actually MI according to the tax code. All right, so that funding fee that you paid, if you paid a funding fee, you were not 100% disabled or didn't have a disability rating, excuse me. If you didn't have a disability rating and you paid a funding fee as a VA loan, or you did an FHA loan, a USDA loan, you paid mortgage insurance up front, okay, as a part of your closing, and it's listed on your title document or on your final CD. That is actually tax deductible depending on how you do your taxes. So mortgage insurance is one tax deduction you need to know about. Talk to your tax professional about taking that deduction on your taxes. Number 3, buying points. If you paid points to buy down your mortgage, it is possible that those points could be tax deductible. So interest rates were higher, a little bit higher in 2022. So some people did pay points to buy down their mortgage. So you need to be aware that you need to be looking at this on your title statement or on your closing disclosure to see if you paid points, and talk to your tax professional to see if those points are actually tax deductible. Furthermore, if you actually bought a house in 2021 and you paid points and you forgot to do it on your 2021 taxes, in some cases it may be possible for you to review those, for your tax professional to review those situations and see if you can actually write off those points that you paid in 2021 when you bought on this year's taxes. Again, talk to your tax professional, get all the details, but make sure you take a look at mortgage points that you paid to buy down your rate. Number 4, property taxes. Be aware that if you paid property taxes as a part of your closing costs, this may be something that you can write off on your taxes, okay? There's a section in there that talked about the upfront property taxes that you paid as part of your closing costs. So if you were not exempt from property taxes or something like that, you potentially could write off the amount that you prepaid in property taxes as part of your closing costs, okay? Talk to your tax professional, okay, to get the details, but it may be possible for you to decrease your tax burden by doing that. Number 5 is the most common deduction that we see. At the end of the year, sometime in January, you should get a 1098 for the previous year's interest that you paid on your home. So if you have $1 million mortgage, you're gonna have a very high interest expense that you actually paid for the year. So be sure, if you're itemizing, talk to your CPA about writing off the interest expense on your mortgage that was actually paid. The other thing that you need to be aware of, make sure you take a look at your closing disclosure, because let's say you closed your loan on like the 1st, 2nd, 3rd, 4th of the month. There's a whole month of interest expense that you're going to pay as a part of your closing costs. So make sure you don't forget about that. It is listed on your closing disclosure or on your final title document that shows you what that interest expense is. So make sure you write off your interest if you're itemizing your deductions, okay? Again, talk to your CPA. I'm not a tax professional, just know a few tips. Number 6, okay? Now, this applies to sellers as well as buyers, because if you are a seller, this is actually a tax deduction that you may be able to take. Now, in quarter 4, 42% of people actually paid for a 2-1 buy down or some type of concessions to sell their home. Now, if you funded a 2-1 buy down or a 3-2-1 buy down or a 1-0 buy down, if you did that as a seller, this is actually something that you might be able to write off. So talk to your tax professional, because this is actually a cost of selling your home or getting your home prepared to sell. So talk to your tax professional, find out, look at your closing final settlement statement, find out if you can give that to your CPA or your tax professional in order to write that off if you funded a 2-1 buy down or something like that. Now, I wrap up by saying this, all of this stuff again, talk to your CPA, talk to your tax professional, because there are a lot of great tax deductions that people miss. And I go back to number 1, you do need a tax professional to do your taxes. That's it for this one. See you next time on Major Money Matters.